Hi Asit, welcome to our show. Thank you so much for coming and sparing out your time for this conversation.
Thank you. It's my pleasure, Kanan.
Wonderful. So Asit, Aviva's legacy in India dates back to the year 1834. Can you tell me how has been Aviva's journey so far?
So I think it's interesting for you to know that Aviva was actually the first insurance company to set foot on Indian soil in 1834. So it had a great history and post-independence, of course, this company stopped existing. And much of the business that it would have done at that point of time got amalgamated during the nationalization in 1956. In 2000s, when the liberalization again started for insurance industry in India, we were one of the first companies to come here, set up a rep office, and we have a joint venture in India with Dabur, which is also a 100+ year old company. Our company itself is more than 325-year old. It's one of the oldest insurance companies in the world, and we are UK based. We are one of the largest life, general as well as pension players in the UK.
Wonderful. So how has been Aviva's journey in the last 5 to 10 years if we talk about India in terms of the number of policies sold or the net premiums underwritten?
So that overall, I think the company has undergone a very big growth in the first 10 years of its existence, when we had close to 40 bank insurance partnerships by the time it was 2005. And after that, we saw a slide, when many of our bank insurance partners, they decided to go along with other insurance companies. And last 3 years, of course, has seen a significant growth in terms of both number of policies that we have written as well as the number of customers that we have acquired. Overall, we have had close to 3 million customers since the time we kind of set foot in India in 2002 till now.
Wow, that's a great number. What about premium? Like, if I talk about the last 10 years specifically, like what has been the growth? If you can tell me a percentage, say.
So as I said, the last 10 years would be 7 years of degrowth.
Okay.
And the company is under right now transitioning. It's again growing. We have a brand new management team. I myself joined about 2 years back.
Okay.
So the last couple of years has been quite exciting as we go about rebuilding the brand, go about rebuilding the company. Because we are now quite focused on India. We've increased our stake to 74% from, and we are one of the only, first few insurers to have taken the maximum stake as far as foreign insurers are concerned. And the last couple of years has seen more than double-digit growth for us.
Great, great. So what all steps is Aviva taking to revive its growth and ultimately provide value to customers? What all different type of products have been launched and are in the pipeline, if you can disclose that?
So first of all, the company is transforming itself to being a product-led company from a distribution-led company. So a lot of focus has gone into design of products. So for example, we have launched a very unique offering in the ULIP space. We have recently launched a very unique offering in the protection space. So we are quite keen to make sure that our business, our products are focused on protection, investment and pensions as segments. And we are working very hard with our sales teams, our product teams and customers to make sure that we are creating unique offerings which talk to the needs of the customer. So I will start with a protection product that we recently launched. It's called a 3D term plan. It has a critical illness cover, it has a cancer cardio cover, it has a pure protection that is offered to the customers. But more importantly, we have packaged in a long-term healthy habits package, which offers the customers a smartwatch to measure the amount of physical activities that people have. It offers a AI-powered nutrition plan. It offers a weighing scale, smart weighing scale, which can tell the customers about what is the muscle mass, what is the water content in the body, which is excellent in terms of cardiovascular management. It also offers a genetic test to customers so that they can know what are the major diseases they are at risk for. So to my mind, it is one of the first few offers of its own kind, which promotes a healthy regime, long-term healthy regime for the customers along with a long-term protection cover. So that's in the protection space. Even the hotly contested ULIP space, where we kind of go head to head with mutual funds. We go head to head with almost all other companies. We have a offer where the allocation charges are of course zero. That is something which many other companies have. But for all the young customers who are less than 42 years of age, there is a option, we call it as a millennial option, which makes sure that all the future premiums that a young person has started in their saving journey is paid by the company in case the customer is no more to make the premiums come true. So that kind of talks to the debate between whether mutual fund plus term is good, or you should take a ULIP product, which bundled product. So these are the kind of products. Even in the pension space, we have tried to create offers which allows for customers to get 60 to 100 guaranteed incomes. Recently, we have designed a product which will also have a step-up income, where incomes will increase every third year for the customers. So the company is completely focused right now on innovative products, and that's the way we want to revive the company.
That's interesting. That's interesting. So since you touch based upon the unbundling of term insurance and mutual funds, be it debt or equity, let me ask you a question on that. Like it's a notion that in the industry that if you have lesser expenses in terms of having an unbundled term insurance plus equity mutual fund, you will most likely outperform the returns of a ULIP. Then why do insurance companies need to have products like ULIPs or endowment plans if we can unbundle and pave the path forward?
I will answer that question differently. Like, is it a wise idea to have a protection cover in a saving product? So imagine that you are paying a premium for 3 years in a mutual fund or a 5-year horizon versus you are paying for the next 30 years.
Okay.
Case in point is National Pension Scheme. Most of the customers that I've spoken to, they love the National Pension Scheme. And everyone starts kind of NPS with a view to save for themselves and their spouse as far as their retirements are concerned. But in case of death, there is no future payments which get into the NPS fund. So the insurance covers that are layered on top of the saving products are designed in a way that the final maturity amount that the customer is hoping to achieve is kind of taken care of by the cover.
Okay.
So that is the most relevant reason why these covers are put on top of these saving plans. And the longer the duration, the more important they become. So if you were to ask me for a 5-year investment, what's the best way to move forward, I would say take a mutual fund, take a pure term plan. It's absolutely all right. But if you're talking about 10, 15, 20, 25, 30 years of horizon, I would still say that, take a product which allows for the investments into the fund to continue, even if it is, if the customer is no more. That's one point. Second point is about reduction in yield. That what is the reduction in yield that you achieve as far as, the products are concerned. And you would know that mutual funds have a flat RIY because they have a flat, fund management charge. Charges are on the AUM. Whereas in terms of the insurance industry, the charges are levied on the premium amount. So as the fund gets older, as the contributions get more and more, the premiums start becoming very small in terms of the AUM. And hence the charges start reducing over a period of time.
Okay.
So anytime you want to take an investment which is more than 10 years, I would say it is more meaningful for customers to put the money into a long duration fund with the insurance company, given that the overall FMC is lesser than the mutual funds. However, a shorter duration, I would still say that it makes more sense to put the money in mutual funds, and that's how both the industries can also kind of possibly coexist.
Got it. So if we talk about your products, say in the case of ULIPs, what are the straight-lined annualized charges on premiums that the customers have to pay?
So in our case, we have removed all allocation charges. So the straight line, it's a zero allocation product.
Okay.
And on top of it, the fund management charge on even a pure play equity is about 1.35. So which means that over a period of time, the customer significantly gains just from a pure investment perspective.
1.35% on premiums.
On the AUM.
On the AUM.
On the AUM. That's the fund management charge that mutual fund in that life insurance industry actually charges.
Okay.
At the same time, there are other advantages. If the customer is below 2.5 lakh rupees, for example, the maturity can be tax free. if the customer remains in the fund and switches between debt and equity, which there might be situations in a longer duration where somebody might want to take their money and move it into debt for protection purpose. All of that does not attract any short-term capital gains. So there are many advantages in longer duration investments as our products are concerned compared to any other financial instrument.
Got it. So let me come back to the question of holding period that you touched based upon.
Yes.
So in equity mutual funds, I think there's a SEBI consultation paper which says that 73% of the regular mutual funds which were redeemed within 2 years of holding period, right? So that's the kind of massive churning that this industry faces.
Yeah.
How about the insurance industries and in particular Aviva? Like, what is the average duration that a Aviva life insurance
Yes.
product customer stays with you?
Yeah. So you will be surprised that one of the pieces that we want to kind of advocate is long is beautiful. Small savings over a long period of time is what we are advocating, and we have created products with minimum 20 years of premium payment terms. So our ULIP, for example, does not exist for shorter durations, because we also figured out that in 20 years, the chances of customer getting a negative return is almost zero. So that's the best horizon for people to make the most out of the markets. And that's how we have designed our products. And last year, about 95% of all the products that we had sold by Aviva as an insurance company were more than 10 years of premium payment terms. Some of the products that I have personally taken, I will stay logged in for more than 25 to 30 years with the company. So the duration is much, much, much longer. That brings us back to another point, that what's the redemption pressure that our fund managers are facing. So over a long duration of time, the redemption pressure is also much lesser on a fund manager in the insurance industry compared to the other peer group.
Got it, got it. So can you still tell me a number, like what's
so
the average
in our
holding
case,
period?
as I said, last entire year was 95% was more than 10, so I would guess that it would be somewhere close to 15 odd years for our customers.
15 is the average holding.
Yeah, because we
period for Aviva
70% of our sale right now in this financial year is also coming from ULIPs. All of them are 20 years plus.
Okay.
So there are other traditional plans which have 10-year premium payment term and 15-year premium payment term. So I would say the average would be anywhere close to 15 or maybe even less, more than that.
So do you think, has it got anything to do with the punishment that the product customers face for redeeming early, that is surrender value?
Yes, a very good question. In fact, the ULIPs don't have a surrender value after the 5th year.
Okay.
So customers are free to take the money.
Okay.
They are free to do partial withdrawal. And we are seeing a similar change on the traditional side as well. So we are completely focused on how the customers do not have a restriction, but at the same time we are educating the customers the benefits of paying and staying long in the products. And we are building a completely new set of distributors who are going to be invested for the long run with the customers. You will be happy to know that we have recently launched a staggered commission which pays very good distribution commission to our distributors. But it doesn't pay all of it upfront. It pays over a period of time, and the longer the customer stays, the more beneficial it is for the distributor also. So we are trying to create products which are fair to the customer, fair to the distributor, as well as fair to the manufacturer, which is us. And all three of us gain as the customer stays long.
Right. So the IRDAI has given a vision of insurance for all by 2047.
Yes.
What's your view on that? Do you think we'll be able to achieve that? And what steps are needed as a whole from the insurance industry for us to achieve that?
It's a tough ask.
Okay.
It's not easy, and I can tell you because I have spent some time in Uttarakhand where we are the lead insurers, going to each and every village, making sure they understand the value, the need for insurance, and they are also able to afford insurance is perhaps the most challenging piece. And the government is doing a lot in terms of getting the industry together through IRDA and getting certain products created which can be sold at a very affordable price in the villages of India. So we are quite hopeful that these initiatives will take off, and these initiatives will help us to reach 2047 insurance for all goal, or perhaps even earlier than that. But at the same time, Even insurers like us have to invest much more in technology, in underwriting practices, because the development of the India stack itself, the technology environment which is happening in India is tremendous. So for us to take advantage of that, making sure that the data from National Health Mission also starts flowing back to make sure that underwriting costs are very, very low is going to be the key as we create more and more affordable products. And having distribution at each and every point is going to be also important, so that customers are having access to these products and there is also awareness about these products.
Right. So from what I understand is that the penetration of insurance products beneath tier 2, tier 3 cities is pretty low. So
Yes.
what is Aviva planning to do, or
So
what is
right
it
now,
doing?
many of the experiments are going on in Uttarakhand, where we started from not having any branch. We're going to be present by end of this financial year in 6 districts, and within those districts, we have made plans to go to each of the blocks, as well as each of the villages that are surrounding the blocks, using our agency expansion, as well as using something called as Bima Vistar, which you would have read about or heard about, where there are going to be agents appointed in each and every village who will be promoting a particular product, which will be a combination of life, health and general, which
Okay.
will protect the life, the health and the property of the customers.
Got it. Got it. That's wonderful. So, what all initiatives have been taken by the government to ensure insurance for all beneath this segment of tier 2, tier 3 cities?
So as I said, there is a Bima
Trinity.
Vistar product, Bima Trinity, where Bima Vistar is nothing but a affordable product which is bundled, and it has a health, it has a life, and it has a property insurance all coupled into one. So the life, the general and the health industry has come together to create this
Okay.
product. And these will be sold by Bima Vahaks, who are going to be mostly women who are based out of the villages, and that will provide the coverage and the affordability for the customers to kind of take up these products. What will be important for us to also have the right training programs, digitally, kind of train these Bima Vahaks, so that the product sale is not going to be as difficult as actually getting them to go for the claims. Like how does one claim the property insurance, how does one claim the health insurance or a life insurance. So that is going to be an ongoing process which will be done jointly by the insurance industry itself.
Got it. So this brings me to my next question: is that typically insurance in India is sold through traditional channels like bank assurance or individual agents, which is largely got nothing to do a lot with tech. There are new players which are coming up, but
Yeah.
largely insurance is sold through, I think, around the 25 plus odd lakh life insurance distributors that are there in India. What changes do you think should be brought about with, what changes should be brought about in the industry as a whole to sell all of these products at a scale through technology?
So I would still say that human beings will be required for some of the products which are long duration. Because when you talk about health insurance, for example, or a critical illness cover that covers a customer for the next 20 years, there will still be a need for them to, have someone who can locate the policy, have someone who can guide them through the process of the claims. So I believe that the combination of technology which is going to enable, or which is going to be enhancing the productivity of the individuals who are invested into the profession of insurance is going to be very important, because many of these claims are also going to come at a very sensitive point of time, where the customer may not be, or the relatives of the customers may not be in the right frame of mind to kind of build all the documentation required for the claims. So my personal belief is that long duration products that we are selling are going to be still sold through human beings, and whereas the customers might go on to various platforms to do price comparison, know more about products. So digital enablement of that through investment into our websites, through investment into front-end platforms where the entire information can be accessed by our agents and advisors are going to be important. Even Bima Sugam, for example, one of the platforms that government is trying to build is going to have all the products and all the information that the customer may want. So, but my firm belief is that technology should be utilized to enhance the productivity and enhance the knowledge levels of the people who are distributing the products on the ground, so that more and more people can get involved into these products.
Got it, got it. So, does Aviva sell direct policies as well?
We
Like,
don't sell any direct
okay,
policies yet. We used to sell, but at this point of time, our entire focus is on agencies and also on selling through our bank assurance channel. The direct that we do is through our employees, so there
okay,
is no direct digital sale that we do.
okay,
However, we have a direct channel where the leads are generated and our employees go and engage directly with the customer to sell.
okay. Do you plan to scale that?
In fact, you will be very happy to know that our entire contribution for last financial year was 1/3 bank assurance, 1/3 direct and 1/3 agency. So we call the direct to customers through our employees as well as the agency as our proprietary channels.
Okay.
We intend to grow our proprietary channels much faster.
Okay.
Given that we can control whatever are the selling practices, we can control the distribution much better compared to what we can control the institutional distributions.
Got it, got it. How is AI, that is artificial intelligence, changing the landscape in the insurance industry, and how is Aviva using AI in its daily life to, from underwriting of policies to ultimately processing the claims?
See, AI is everywhere.
Okay.
Right. So if you look at the package that we have just launched, it's called Healthy Habits Package. It uses a lot of machine learning and artificial intelligence in the devices that we are providing. For example, there is an AI-powered nutrition plan where a customer can choose what kind of cuisine they like or he or she likes, and design a very personalized diet plan for themselves with very personalized objectives. Somebody may want to gain muscle, somebody may want to lose weight. So the experience itself is going to be very different for customers because we are using artificial intelligence. So artificial intelligence is also something that is getting used by us for some of the experimental products that we are doing, where it's a visual AI which looks at a customer through a mobile phone and then gives all health parameters, and that's all that we are doing as far as underwriting is concerned. There is also the liveliness check, for example. Then there is a lot of data stacks which are coming through now, interplay of data. That data can be done through machine learning to do very smart underwriting without asking questions like, are you in good health? That is something that you can infer from a range of data that you can have at the background that algorithms can learn. So the world is moving in a very fast pace towards using artificial intelligence in almost every aspect of our business. We are, however, focused on creating and experiences using AI in health tech, so that we can create a very smart preventive regime for our customers. As we give them smart long-term financial solutions, we also want to make sure that we give them smart long-term health solutions or wellness solutions, so that they can enjoy the wealth that they have kind of created along with us.
Great. So does that also mean that if you are seeing any red signals in a person's health or their lifestyle patterns, you proactively, your employees proactively go out and tell them, this is the checkup that maybe you should get done, or have your regular health checkup done through an embedded feature of our life insurance product,
Yeah.
so that you know that you are in the best kind of health, which ultimately reduces your claims as well.
We are right now at a very nascent stage. As I said, 21st of last month was the first time that we launched our first products. There are very smart companies which have partnered with us. We are working closely with them to create more and more products. So of course the direction will be as such in that direction only. But at the same time, have we got all those products readily available right now? Answer is no. There will be a lot that we will be churning out together with these partners that we have.
Okay, got it. So Asit, let me come to the distribution part. There have been instances where broking companies call the customers and promise literally anything just to sell a policy, which is absolute sheer mis-selling. Like, can you tell us a few examples where you felt that was happening with your customers to sell your policies, and how did you tackle that?
So 2 years back, when I joined in Aviva, we had partnerships with many broking companies, and when we analyzed the mis-selling complaints that were coming through, we realized that the call centers that were calling the customers are possibly promising more than something beyond insurance to be able to sell policies. Now that's not a good practice at all, and we have kind of decided over a period of time, we reasoned out with some of these partners that we had, but over a period of time when improvement didn't happen, we decided to walk away from that segment. So at this point of time in Aviva, we have no broking partners, especially the ones where call centers are operating and they are calling customers and we are not happy with the quality. We have cut ties with them. Of course, there are some good companies also operating in the broking space. So we are very clear that we will choose what kind of partnerships that we have, and anyone who is not selling or not following the right selling practices is not welcome into our companies.
Okay.
So we do audit the selling process very, very diligently, whether it is an individual agent or whether it is a broking company or whether they are any of our other partners. And then we take reasonable steps with them if there are existing partners. We work together, we try and create make processes which call up the customer, verify the details before the policies get issued. But if despite that the complaints or selling complaints don't come down, then there is no option left for us but to kind of discontinue partnerships with some of these players. So we are quite in favor of good brokers who have right practices thriving. At the same time, we are also very vocal about not so good companies which have also come into insurance industry to be identified and moved out of the industry, because they are damaging the reputation of the entire industry.
Right. I'll tell you my example. So there's an online selling platform which called me up and said that, sir, ये आप term insurance policy देख रहे थे 6 महीने पहले. Of course, they were following up with me in this last 6 months, and then I said that I don't want to purchase it. Then after 6 months, they out of nowhere they called me up and said that एक term insurance policy ले लीजिए. मैंने कहा I have already purchased one. Said कोई बात नहीं एक और ले लीजिए. Now without assessing whether I need that cover or not,
Yeah.
they are just told to sell at any cost, and that's a big problem, right? So how do you think this problem, how much this problem is rampant, and how is Aviva going to tackle this challenge of mis-selling by agents?
So the answer to that possibly lies in technology. Okay, so for example, the customer that you were could have been asked that what is the cover that you have taken, and then if there was a gap, there could have been a very intelligent conversation around it that could have happened, where you would have not felt that you were being missold or force sold something.
Right.
If you remember, I spoke about technology powering some of these interactions.
Right.
So at Aviva, we are developing some very intelligent financial calculators, which can be very easily used by all our distributors to have intelligent conversations around insurance, especially term insurance or critical illness covers or pension requirements or long duration fund requirement for certain purposes. So the ease of usage of those calculators will make sure that the quality of conversation is always veering towards need-based selling rather than veering towards a forced sell. So at Aviva, we are encouraging our distributors to use these calculators, number one. Second, we are also kind of creating commission structures for them where they will not benefit if the customer is not happy. So the commission structures are changing altogether. We are paying a much lesser distribution cost right in the beginning and increasing them substantially as the customer gets stays in the policy and pays premiums going forward, rather than the front loading of commissions that is so prevalent in the industry. That allows for people as well as distributors to think long term, and for any long term relationship cannot start with a mis-selling approach.
Right.
That you would agree.
Right, absolutely. But do you feel that distributors will also think that way, or they'll side their paths with an insurer who will think that way and go with someone who provides upfront 30-40% commission?
It's a choice. It's a choice that is there for a distributor to make. We are creating products which are easy to sell, and we are searching for insurers or insurance agents who are new to insurance, so that we can help them build their portfolio along with us. So selection of advisors is very important, and over a period of time, the money that they make is more than what they will make by getting upfront commissions. So the distributors who are patient, the distributors who are there in the long run to be in this industry are going to remain with us, and the distributors who are going to be fly-by-night operators, of course, will not like to stay with us.
Absolutely, absolutely. That's a great thing. So now we've talked a lot about distributors, the industry as a whole, but still, somewhere we feel that even though the industry is growing at 7 odd %, the penetration is still very low. 10 years
Yes.
back, when I had just started my CA, there were reports by top consulting firms which said that insurance industry is going to explode like anything in the next 1 decade. But unfortunately, that didn't happen. Not quite as well, I would say. Do you feel something is going to change in the next 10 years and we can see that kind of growth?
So I think this is the best time for anybody to be in insurance industry. Anyone who's young and watching this podcast, I would welcome them to join insurance industry, because the coming decade is for insurance.
Okay.
And why do I say that is because with such a strong call about insurance for all that is coming from the IIDA and resonated alongside all insurance players, whether they're life, general players or health insurance companies, the effort and the development that is going to happen in insurance industry to make that come true is going to be enormous. Some of the reports suggest that if 2047 insurance for all is going to happen, then we'll have 3 players in the top 50 in the world of life insurance companies, whereas right now there's only 1 player, which is Life Insurance Corporation, which is ranked number 55 by 2047. So it's going to be a golden period for life insurance for sure, and I'm sure all players will come together to make it true.
Great. Thank you, Asit. That was quite an insightful conversation that we had with you. Any closing notes that you have?
I would simply say that my message to customers who are watching this would be that save more, because the saving rate in the country is coming down. There are serious issues in the society that we are facing. Not enough customers are taking critical illness and cancer cardio covers, which is bleeding their family savings. So they must protect their wealth by taking cancer cardio covers or critical illness covers along with the term covers that they are taking, and also get into the habit of spending a little less and saving a little more money regularly over a long period of time, because small savings, long period is beautiful. It's not painstaking but can be done. So that's all from my side. Thank you for having me in the chat.
Pleasure.
It's my
Thank you
pleasure.
so much.